Investor Zone. Uh, so today we will be discussing a very important topic called what are the rules we need to follow if we want to stay forever or for the longer period into the stock markets. So before that, I wish each and every one of you a very happy new year. So let's get started with the topic. Let's go and see what are the rules which I framed for myself and which I feel like which may be helpful for you as well. So the rule number one, never lose more than 5% of your capital in one day. This rule is mainly for the people who are there in the trading because in the investing, the 5% is a very abnormal case. Your portfolio, even Nifty corrects 1% or 1.5%. So your portfolio may correct altogether 2 to 2.5% if you have been allocated your funds into the small and mid caps. But the rule number one is primarily for the traders. What I mean by this rule, so for example, if your capital is 1 lakh, I mean that in the one trade you should not lose 5%. So that means 5% of 1 lakh is 5,000. So if I take trade today, so I should not lose more than 5,000 rupees in one day because we have to make sure that capital is very important. So we have to preserve the capital. That is a first and foremost step to stay in the stock market. Okay, so for that purpose my rule number one is never lose more than 5% of your capital in one day. So if you feel that if that 5% has gone, or else if you feel that you may lose more than 5%, then just book the loss and then just get out of that trade, or else get out of the game for that day, and you just go out and you just relax and then come fresh for the next day. Don't try to do a revenge kind of trading because you will be losing more. You'll be end up losing more definitely. Okay, so this is my rule number one. Coming to the rule number two, never allocate more than 5 to 7% of your capital to one stock. So what does I mean by this? um, Let me take one example. So IEX is the one of the good stock and which is buzzing around so many people, and in social media also you could say so many people will be sharing IEX is one of the best stock. But it doesn't mean that whatever you invest, you should get invested the entire amount into one stock. So never allocate your entire capital more than 5 to 7% for any one stock. Let me suppose say I'm having a capital of 1 lakh. So my investment into IEX would be not more than 5 to 5,000 to 7,000, because that's how you have to follow. Or else what happens if there is any negative news, or else if there is any little diversification in terms of portfolio, then it will affect us badly. Because what I mean to say, 5 to 7% you will be having definitively very good stocks. So my criteria here for 5 to 7% means, so you'll be having around 20 or 17 to 20 stocks in your portfolio, so which I feel our portfolio is very much well diversified. So that is the main reason I personally never allocate more than 5 to 7% of my capital for any one particular stock. So IEX is a one particular stock, or else Deepak Nitrite, or else whatever the stock is. These are all beautiful stock. We all know that, but it doesn't mean that we have to, invest most of our capital into that particular stock. So we have to follow a few investment rules in order to make sure that our accounts hasn't blown if something goes wrong. So diversification is one of the important rule which you have to follow in terms of your portfolio. So coming to the rule number three, never allocate more than 12 to 15% in any one segment. So what do I mean from this? So let me suppose say in the chemical sector, so Deepak Nitrite is the one of the best stock, and SRF is the one of the best stock. Balaji Amines, BASF. There were so many alkyl amines. There were so many stocks which are really giving a very good return since so long. It doesn't mean that my capital should go more into the chemical sector, I mean, like, should not go beyond certain limits. So what happens? Let me put this way: if you see, the chemical stocks has recently corrected very badly. So almost 30% of the I mean, like 30% correction has happened in the chemical stocks. So what if you have allocated, majority of your capital to any one particular sector, then it will definitely affect you if something goes wrong. So in that mode, I want to diversify in terms of stock wise and as well as in terms of sector wise. So I hope you got this point. Let me suppose take Deepak Nitrite as an example in the chemical sector. I will allocate not more than 5 to 7%. And SRF, I will allocate not more than 5 to 7%. And I have to ensure that if I make third entry into the chemical stock, then my entire portfolio should not be more than 15. I mean, like my entire allocation to the chemical sector should not be more than 15% when it compares to my entire capital. So that's what I mean out of rule number three. Coming to the rule number four, stop loss. So stop loss is Lakshmana Rekha. What do I mean by stop loss? So let us take some classic examples like Satyam scam, like S Bank. There were many, many, many stocks which has eroded the wealth of investors by almost 90%. So just imagine if you would have been followed the stop loss rule, then definitely you will be on the much, much, much safer side. See what happens if any good stock for that matter, stop loss hits, just exit out of that and make sure your re-entry is at good levels. So my intention here, stop loss means once it hits the stop loss, you should get out of that stock. It's not my intention. So make sure respect the stop loss and your re-entry should be proper. So then also you have to maintain the stop loss rule. So then only we can just get out of very bad stocks like S Bank or else Satyam or else whatever, like recent example RBL. If you could see RBL, what happened? It went all the way from 180 to 120 downside. We know in 2 days. And so these kind of things you have to ensure that if you can just protect your things by way of keeping stop loss, then the capital, whatever the importance we are giving to the capital, so that essence is carried out of that. Like we can't just go on averaging just because the stock is good. So that averaging rule works, but then at the same time you have to ensure that stop loss is really really important for any kind of stock for that matter. Satyam Ramalingaraju, I mean, like, Satyam stock is one of the best stock at that time. But what happens? So what I mean by here, like, just maintain the stop losses for any kind of stocks. Just try to re-enter the stocks whenever you get an opportunity and whenever you feel like the downside has become bottomed, and then from there onwards you could see a lot more upside potential in that particular stock. So coming to the rule number five, no over trading, stick to the number of trades till you become professionals. So what do I mean by this? So what happens? So if you keep on trading, so your psychology will get affected. So unless you become professional, you have to stick yourself for number of trades in a day. For me personally, I won't take more than 7 to 10 trades in any day. So that is my upper side limit. So whatever the trades I have taken in the day, then definitely it should be below 10. If it exceeds 10, definitely I'll be on the lower side, because that's experience which I got personally. Because and my mindset is also disturbed on the day. So whenever I keep on over trading just because I have seen some profits or else some losses, then definitely that kind of approaches is affecting my mindset. So unless you become really professional, like at least till then you have to maintain. that ceiling limit for the number of trades you will be taking in the entire day. And coming to the rule number six, right stock, right timing, small stop loss, big profit. So the entire rule is talking about the risk management. So the risk management is nothing but what is the risk you are taking for any particular entry and what is the reward you are expecting. So this is really, really crucial if you want to stay longer into the stock market, because for every 1 rupee of risk, at least there should be 1 rupee of reward. You can't just enter into the trade because I could earn so much of amount. Like if it goes up, that's not the proper way. Like you have to see what is your stop loss. So when you see your stop loss, then make sure that reward for that particular risk is at least one. Personally, I'll be looking for a reward of two. 1:2 is the ideal risk reward which I'll be looking for. So 1:1, at times I'll take 1:1 trades as well, but it's very rare. So mainly I'll be looking for 1:2 risk reward ratio. And rule number seven, which is really, really important. We have to repeat these rules every day. So what happens, like I'll just keep rules for myself, and then those rules will be stick to walls, or else those rules will be stick to some notebooks in my dressing room. So that doesn't make any sense. So the main intention behind this rule 7 is you have to repeat these rules. Like once you start repeating these rules every day, so definitely you could see a change of behavior within yourself, because that's the power of repetition. Unknowingly you'll change your behavior if you keep on following these rules every day. So that is the essence of this rule number 7. And there is one disclaimer from my side. Whatever the rules I have been mentioned above or else in the previous slides, those are all flexible. So I just kept for myself as 5 to 7%. If you are feeling like 5 to 7% is not matching to your criteria, it's up to you. You can just make it 4 to 5% or else 7 to 8%. So it all depends upon once again uh, what kind of investor you are. So this is like there's no hard and fast rule. So whatever the rules I have been mentioned here, it's flexible, and feel free to amend these rules as per your requirements. And this is one nice quote like which I want to bring to your notice. So the big money is not in the buying or selling, but in the waiting. For this, I'll just say one thing: take any stock which you have been entered 1 year back and compare that stock today, and the compare that stock where you booked your profits. 90% of the stocks you might have booked less than what it is trading now. You may feel that just because we sold it earlier, we have reinvested into in another stock and we have earned some return out of that. But in that case also, you'll be earning less than what you will be earning out of that stock. See, conviction matters here. You know, if I take any particular stock, I should be able to fix the targets. Like what is the upper target? Breadcrumb group. So that is one of the classic example which I have recently seen. Flight all the way from 9 rupees to 200 rupees. It's very exception that I will accept. But then, waiting is something which will be rewarding more than in terms of buying or selling. In buying or selling, we'll be donating our money in the form of brokerage to these brokers. So personally, at least maintain some certain percentage of return. Like let me suppose say for any trade, generally what I'll keep, if it is 1 week, then if there is a return of more than 12, 10, 20%, then I'll book. If it is 1 month, I'll try to wait for that. Or if it hits my stop loss, then definitely I'll respect. So that is the one essence. Like the big money is not in buying or selling, but in the waiting. So last but not least, we there in the Telegram and the Instagram with the lazy underscore investor zone. So if you want to follow any further updates from our side, please do subscribe to our Telegram channel as well as Instagram channel and YouTube channel as well. And thank you so much for being patient towards us and for listening towards us. So that's it for today, guys. And we will soon come back with some more interesting videos. Please do subscribe to our channel. Please do hit like button if you feel this video is really helpful for you. Thank you so much once again. Jai Hind.